Welcome to Forex, and here we're looking at the US dollar. The support at 80.50 is held quite nicely, and we can still look at this as being an A wave, a B wave, and 5 waves here for wave C here. Now, if that's going to be the case, we need to see 5 waves up through here, and currently we can only see 3 waves up through here, so we need to give it a little bit of time. 1, 2 here, 3rd here, possible 4th here, and 5th here. If we do get 5 waves here, that means that after 5 waves we get a counter trend, don't we? So an A and a B and a C in some fashion, and then we'll get another 5 here. But as it stands, it's only 3 waves, so it can fail from here and move down. So that would be a corrective move to this point so far. So drilling into here and having a look at this here so far, we can see that we've got basically well, we can just 5 waves here really up for wave 1 here. This is a little 4th wave, and the 1 and 2 would be in here. So we can see this is a 3rd wave here. This is definitely, well, it's not a bad looking 4th wave, even though it's a bit sort of light on, but you know, nice strong 3rd wave here, 4th wave. So it does appear that we're going to get 5 waves here. So, you know, as I just mentioned, that being the case, then it really puts the US dollar into a positive mode. It's probably a good idea to have a look at, keep an eye on anyway, the US dollar yen and also the Swissy as well, to see their wave counts to the upside. But just bear in mind the move here currently is 3 waves, so we need to see, you know, we need to confirm 5 waves to the upside. So that's something that you can look for, and that will obviously help with choosing direction as well. And that will also obviously influence the euro as well, you know, pretty much mirror opposite, so to speak. So we've been looking at well, 5 waves down here we're counting, and then we've been working through this little area through here for a while, and so far we've got it as an A and a B and a C wave here. Now that's fine. It's just that this low here is quite close to this sort of low here as well. So it is possible that this could be up for wave 1 here, and then also moving back here. So the US dollar, we were trying to count 5 waves up. That's to get direction. This is what we'd have to do here to confirm this A, B, and C here, and a move lower through here. We would need to confirm 5 waves down through to here, and currently there's only 3 waves down through here, and that's pulling back to the 50-60% retracement level of this move here. So if we just drill into this for a moment here, just on the 15-minute chart, here's our wave B here and our wave C here, and the little circle here is our, you know, 50-60% retracement level of this move through here. And currently down through here we can count well, 3 waves. There's an A and a B and a C here, so it can turn here and, you know, and move up here. So we would need to get this wave 4 here and wave 5 here. So we've got, for a bear market, 1, 2, 3, 4, and 5. If we get those 5 waves, then you know the direction. And if we do get those 5 waves, it will trace out like this here. So we'll have the 1, 2, 3, 4, and 5 down here, somewhere in here. And then we could look for an A and a B and a C retracement level here. I'm just assuming the midpoint here, but in this C wave here, you would want to count 5 little waves in here to nail the little sucker down a little bit finer, and then look to short from that point there. So that would be the short trade here, but confirming 5, an ABC counter trend, narrowing the last 5 waves down the C wave, and then looking to build the trade in through this area here. But of course there'll be another 5 waves here and a counter trend here, and so it'll be choppy in here anyway, so you need to stand back a little bit. So look, that's how I sort of see that. But you know, if this market finds support back up on the 135.60 from here, say 60 and into this group 2 area here, then it's a move up here creates overlapping wave structures as such coming up through here. So a move up through here would overlap wave 1. Wave 1 can be here, 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 So take this conservative one, probably this one, but this conservative one here. So I move up through this low here, confirms that this is an A and a B and a C wave here, and we'll be taking those highs out there. So it's always good to sort of understand both sides of the story and you know where one crosses over to confirm another one, so to speak, and that's it really, if you make sense of all those lines. Okay, the Australian dollar's pulled back a bit further than we expected, and just looking at it in a slightly different light now. So still considering it to the upside. We know that the daily chart is had been oversold up through here, and obviously that took reign over the market, so to speak. But now we're looking at this as an A wave, a B wave, and a C wave down through here in 5 waves, the 1, the 2, the 3, the 4, and the 5. And there'll be 5 waves in here as well that can drop through the top of subgroup 1, the 30 here, 93, 30, and 20. So it can move lower into here. This is the 61.8 retracement level of the previous wave, which I've actually taken from this low here, okay? So that's where I've started this trend up through here, be that right or wrong. That's how I sort of see it. So we can look for support in here, you know, in here, roughly here. So this is just it here. Another little note here, the 1, the 2, nice sort of third wave down through here, the beginning, the middle, and the ending of the third wave, fourth wave pulling back to the fourth wave, 1 lesser degree, and then the fifth wave down here, which can be, you know, it can be this little guy just in here. As such, I haven't pulled that apart here, but I just assumed that would be corrective here, and once it's rallied, drop through here, but it can continue up here. So look, a nice tested support on 40 could, you know, get a small position with the view of adding on top of the midpoint here, that being the important sort of level there, 5 being the second strongest number. The Euro Australian, it's also, we were expecting it to rally, and it's on its way, and we're looking at this as an ABC rally here, as an A wave, a B wave, and then the C wave up here in 5 waves up through here, and you can see the 1, 2, nice strong third wave, fourth wave, and the fifth wave that will be slightly skewed around the large number 145, but should see a high up here and then a rolling over at that point there, and we'll pick up this correction through here. We'll examine that as it once it matures a little bit to see if we're actually going to get a larger trend to the upside, because at the same time too we understand that this area down through here on the daily is oversold, and it's possible to have a low in place, so we just need to be a bit mindful of that. But I just want to see this play out here first. If we can get 5 waves up here, which would be 1, 2, 3, 4, and 5 up here, then we'll look to trade long after the A, B, and C here. Then we'll trade long from that point. But otherwise, we'll just allow this to play out here, and we'll see what it looks like when it's done and dusted. The yen crosses for the pound and the euro yen. Obviously, the pound, as we've mentioned before, has been stronger in trending generally, and the euro can catch up to that, but it's the case. So look, what I was looking at here just on this 2-hour chart here is that, you know, this wave here looks like a nice strong third wave here, so we could call it, and there's a nice 5-wave structure in here, so we can call this 1 and 2 here, and this is the third wave here. So we could call this the 4th wave and the 5th wave here that may or may not be finished here, but I'm thinking that, you know, once those 5 waves are completed, and it's a little bit tricky to read in here, I have to say, you know, but it could move higher through here, but then we should look for a correction here. As such, this is the 50 and 60% retracement level of this move through to here. once we've got that, then we can move up here. So we just need to be a little bit careful in this zone here. If we get support on 173.30 and make sure it's a nice tested support, then we can trade long from that point, and we can look to go up even higher from there, okay? If you're long there already, well then stay long. Right, the euro yen. Also here we're looking at, you know, a possible low here as well. It's sort of, you know, it's made a bit of an effort, and it's also looking like we've got like the first little impulse wave developing through here, and that's what we were looking at yesterday as well, seeing how that developed. And you know, this here, the one of the main points here is that there's really no overlapping wave structures. Well, there is in the correction. I mean, this little pattern here, is very similar to this pattern here, isn't it? So we could expect this to pop off through here, and also being on top of subgroup 1 here, 30 is always, it separates the orders from the 138 here and gives space for it to move higher. So we can expect those to be taken out here. So you can look to go long on 30, 40 and 50 through here, and this should build up. I would keep the stop out of the way though from here. The wave count up through here does count in 5 up to here, so basically the 1 to here, the A, the B and the C for wave 2 here. This looks like a little 4th wave here, and then a 5th wave to this little area through here. So the one of the main points here to sort of understand is when a trend is trending, you have to ask yourself, is it diminishing or is it expanding? And in this case here, we can see that it's expanding, because we can see that this correction here is, you know, 60% bigger than this one here or thereabout. You know, I just use the Fibonacci numbers as a template, but you know, it does appear to be expanding. So that's a good positive on that note there. Alrighty, that's it. Cheers.